Hi guys, welcome to another video by Optionables. My name is Saket, and in this video we are going to do a market review where first we are going to understand what exactly happened to the markets on Friday. Then we are going to look at what we can expect from the market on Monday as well as for the next week. And finally we are also going to discuss about the trades which we have taken. So now coming to Thursday's trade, where we couldn't actually make a video regarding the expiry day trade, I had put a post on the community tab. So we ended up making around 6 lakh profit, and yesterday also we made a profit of close to 1.2 lakh. So both put together we made a profit of close to 7 lakh, and we were more or less able to recover what we lost on Wednesday. So from Monday we are going to have a new start. So let's hope for the best and see how that goes. So before moving on, there is one really exciting thing which I would like to tell. So there is an online conference happening known as the Marketsleague. And in this, industry speakers are taking part, and I am also one of the speakers, where I will be revealing an interesting strategy with an adjustment. So there is one more catch to this, guys. So the link is in the description and you can check it out to know more details about the event. So if you use the link in the description below, you are just going to get it for $9.99 only. But if this is not enough for it to make it exciting, then there is one more offer on top of this. So if you are already using Firstock broker, or if you are opening a Firstock account, then if you just pay $9.99 to register for the conference, you are going to get orders worth 2,000 rupees free. That means you are actually benefiting. You are effectively coming free to the conference and also getting another 1,000 rupees order worth free. So here, if you open an account with Firstock, or if you already have an account with Firstock, and if you place the next 100 orders after registering to this event, so those 100 orders will be absolutely free. So that is one more offer. That means effectively you will be coming free for the conference, and you will be having additional 1,000 rupees worth of free orders with you. So with that, we'll also be now moving on to the video, and don't forget to check out the link in the description. And towards the end of this video, I also have one more important announcement to make, and I am pretty sure that all of you would like it as well. Thank you so much for joining, guys, and see you soon next time. So now coming to the market report and what exactly happened on Friday. So on Friday, we witnessed a complete consolidation both in Nifty as well as Bank Nifty. So in Nifty, no major sectorial indices gained more than 1% or lost more than 1%, and there was complete consolidation where Nifty just moved 5 points. So there was individual stock movements where Asian Paints gained around 3%, even Pidilite gained around 3%. So more or less the market entirely consolidated, and even Bank Nifty closed close to where it opened, and it was a complete flat day. On Friday, FIIs continued their selling, where they ended up selling for close to 1,000 crores, and DIIs purchased for close to 400 crores. So net activity was also quite small, so it was neither a huge selling nor huge buying, and I think even retail participation was pretty good on Friday. So the thing is, right now we can expect some sort of a support coming in lower side at 17,200 and some sort of a resistance at 17,700 as well as 800. So now we are quickly going to look at the OI and try to analyze what that is suggesting. We are also going to look at the charts for the support and resistance nearby, and we are later going to look at our trades and try to understand what exactly happened. So we'll be quickly moving on to that right now. So first I will be quickly looking at the chart data of both Nifty as well as Bank Nifty. And as you can see here, I have just plotted out the support and resistance for Bank Nifty and Nifty. So Nifty for the coming week, we expect a good resistance to be at 17,600 and some sort of a support to come in at 17,300. So these levels are going to act as a very good range for Nifty, and we can expect Nifty to consolidate in this level, and if there is any break above 17,600, then we can expect a further up move to continue, and similarly if there is any break below 17,300, then we can expect a move towards 17,000 again. So broadly, we are expecting the market to hold this range, and if it breaks this range, then we can expect on the upside a move up till 17,700 or 800, and on the lower side, if it breaks 17,300, we can expect a move up till 17,000. So when we look at the open interest on Friday, a lot more calls were added compared to puts, because there were a lot of puts before and some extra calls were added this time. But when you look at the overall open interest also, so overall open interest, the calls as well as puts are more or less equal. So both are 38 million, and there is a lot of short straddles being created at 17,500, and 17,500 short straddle is right now pricing close to 250 points, and we must be expecting a range of somewhere close to 17,200 to 800 for this particular week, based on the amount of short straddles that have been created at 17,500. So given this, we do find some support or some good put rating at 17,400 and good call rating at 17,600. But broadly for this week, we are expecting the market to consolidate in this wider range of 17,800 to 17,200. So based on technicals, we do find some good support and resistance in at around 17,300 to 17,600, but the OI is suggesting slightly different. So overall, the mood in Nifty is more or less consolidation. The range might differ, but I am expecting not to see any kind of a big up move or down move unless there is some news based reaction. I am expecting 17,800 to be held, and as well as even 17,200 or 300 to be held on the lower level. So these are the crucial levels which we will have to watch out for. Now coming to Bank Nifty, again we are going to go to the charts first. So when we go to the charts first, we do see some good support coming in at 36,700, because previously this was acting as a very strong resistance. If we go back a little, so we do see here it was acting as a very strong resistance. So once that is broken, now obviously it will act as a very strong support. So we can expect 36,700 to be held on the lower side, whereas on the upper side, if it breaks 37,500 by any chance, then we can expect a move up till 37,900 or 38,000 also. So overall, again in Bank Nifty, I am expecting a sort of consolidation based on technicals. But when I look at the open interest, let's just see what that suggests. So open interest, based on the Friday's data, we do see again equal number of puts as well as calls written. And when we come to the overall picture, again here we see equal number of calls as well as puts. So broadly, a lot of short straddles have been created at 37,000, which means that people are more or less expecting a consolidation. So even if you look at the premiums, they are pricing in close to 600, 700 points. So broadly, you can expect the markets to trade in the range of 36,300 all the way up till 37,700. So this is the broader range what you can expect the market to trade based on the OI as well as chart data. So again, chart data is suggesting you a narrower range than the OI data, but both put together, OI data suggests a very strong resistance at 38,000 and a very strong support at 36,000. So it is for us to see how exactly the market behaves on the upcoming days, for us to get a better clarity of what exactly is the sentiment in the market. So right now for Nifty, the expected range is somewhere around 17,300 up till 17,700, and for Bank Nifty we are expecting a range of 36,300 all the way up till 37,700, and broadly we do find some good support coming in at 36,000 and some good resistance coming in at 38,000. So to be little more conservative, you can also expect a range between 36,000 all the way up till 38,000. This is the expectation from the market as of now. And coming to the interesting part which I told earlier, so we recently started intraday trading, and yesterday again we took a good intraday trade, but right now I have slowly changed the way we do intraday trade, because we are doing positional, and we are not looking to make around 3 or 4% from intraday. So 3% on our capital would be something like 15 lakh or so, right? So we are not actually trying to make 3 or 4% from our capital doing intraday, because we also have positional alongside. So what we are rather trying to do is we are trying to aim for 1% only from intraday in a month. So around 0.75 to 1%, which is around 3 lakh to 5 lakh a month from intraday trade, and remaining we'll try to get it from positional. So we'll aim for around 10 lakh from positional trade. So what exactly is the new idea with intraday? So the new idea is one, we are not going to trade every day. Okay, so if you are not trading every day, then when are you going to trade, Saket? So that is very important to be answered, right? So second one, we are only going to take the trade in two scenarios. One, when we see the markets consolidating, where we don't expect any big up move or down move. So maybe let's say in the course of 10 days, I might only have to trade for 3 days. Remaining 7 days, I will not even trade. So again, the days when I pick that I want to trade, let's say the market doesn't end up consolidating where there's a huge up move or a down move, right? So then again, those days I'm going to take a hit. But all I have to do is the days when I pick that the market is going to consolidate, out of 10 days I pick, even if 6 days there is a consolidation, that is more than enough. So this is one thing which I have to work on, to make sure that out of the 10 days I pick that the market is going to consolidate, I am at least right with 6 of the days, right? Second one, I'm going to trade when the IV increases. Let's say there's a huge down move or a huge up move in the market. That time the call premiums are not going to fall as much, whereas the put premiums are going to spike quite a lot. Call premiums are going to fall slightly less due to increased IV. So whenever we witness such a move, during such cases, it's a good time to enter, get a quick buck and come out. So, and finally, the third idea would be to book a profit or a loss whenever we make around 30k. So let's say 10 o'clock I enter a trade, I end up losing around 30k, I can just book this. And let's say I end up making around 30k, I can just take out that 30k profits, and maybe if the market is cool or stable even during the afternoon session, I can re-enter and take the trade. So the idea behind this is whenever there is a spike during the middle of the day and the IV increases, maybe we can use that as a entry opportunity and re-enter the trade. So right now the position book is not loading since it's weekend, hence I'm not able to show you the intraday trades. We ended up booking somewhere close to 65-70k from Friday's intraday trade, and we also booked around 50k from positional F&O trade, so totaling up to 1 lakh. And finally, tomorrow we'll be coming out with OI part 3. So that is the third part of OI video, which many of you have been asking for in the comment section. So we'll be out with that tomorrow, and in that we are going to discuss how exactly you can use OI to enter the trade, adjust the trade, as well as we are also going to understand how we can use it in live trade. So I'm going to give you a live trade example as well. I hope all of you guys are excited and you like the video as well. So meanwhile, if you have liked this content, then don't forget to hit the like button, share this video, as well as subscribe to Optionables. Thank you so much for joining, guys.